Since the beginning of 2025, there has been a potentially once in a lifetime opportunity in the precious metal market. This is something that's not been seen in my lifetime. It's right under our noses, and I think most investors are completely ignoring what's going on. To see what this is all about, we need to look at the platinum to gold ratio. Visitors to the Auronum website have already had the opportunity to read about this research before the video went live. If you want to be one of the first to read our research in the precious metal industry, then click the link in the description and you'll be taken to our research page. 2025 saw 1 ounce of gold being worth 3 ounces of platinum for the first time in history. We've never seen this before. 1 ounce of gold can be exchanged for 3 ounces of platinum. And this is in stark contrast to what we saw just before the great financial crash of 2008, in which 1 ounce of gold could only buy about a half an ounce of platinum. If you sold 1 ounce of gold and exchanged that for 3 ounces of platinum, waited for the ratio to fall to 2 to 1, and then exchanged the platinum back for gold, you would get just under half an ounce of gold completely for free just by trading this ratio. So, is this ratio trade a massive once in a lifetime opportunity? Or are we seeing a permanent change to the fundamentals of the gold and platinum markets? Everyone knows that platinum prices are low because a lion's share of platinum demand is for automotives, which has seen a demand collapse since the diesel scandal back in 2015. And a crash in platinum demand is the reason why prices are so cheap. But if you dig into the data, this is not the case at all. Demand for platinum is no lower now than it was a decade ago in the years leading up to the 2015 diesel scandal, which saw Volkswagen misrepresent their emissions data, leading to tougher regulation on diesel vehicles, which is a large proportion of annual platinum consumption. Automotive demand elsewhere has developed enough to absorb any reduction in European diesel vehicles. The platinum demand forecast shows importantly that platinum demand is projected to increase from current levels. A few important observations for the demand forecast is that although platinum demand for auto catalysts will drop significantly, almost all of this lost demand will be absorbed by the growth of hydrogen, an essential aspect of the decarbonisation of developed economies. A lot of the growth for platinum is set to be from the jewelry industry. This will likely happen as Asia becomes richer. They will be positioned to consume more platinum. Some growth is expected to come from the substitution of palladium for platinum as part of white gold alloys. Until 2019, palladium was significantly cheaper than platinum, which is why palladium was favoured as part of the white gold alloy. But as these roles have been reversed, substitution for the cheaper and more durable platinum is expected to grow platinum's market share in the jewelry trade. When you look at the annual platinum supply and demand data, you can see over the last decade, supply and demand have been very steady and in quite good balance. This is why the platinum price has been range bound. You can actually buy platinum at the same price that you could back in 2015. How many things can you think of that you can buy at the same price that they was 10 years ago? Something key for investors to understand is that if you're looking at the price of an asset and it's going horizontally over time and it's not changing, then that asset, when adjusted for inflation, is actually falling. And we can say this about the platinum market. So when we adjust platinum for inflation, it's actually in a downtrend. Platinum is getting cheaper. It's only the currency debasement that's given the illusion that the price is not changing. The issue with this is the cost to mine platinum will be rising with general price inflation. The miners are being squeezed because their costs are rising, but the platinum that they are producing is just not going up in price. The latest guidance from Anglo America, which is the world's largest platinum producer, states the average all-in sustaining cost of producing the three platinum group metals is $986 per ounce, which means they are not profiting from mining platinum at current prices. One of the factors that's helped the miners is the South African rand has devalued against the US dollar over the past decade. As the miners' costs are in South African rand but their revenues are in US dollars, it will have softened the blow somewhat, as 71.1% of 2024 mined platinum supply came from South Africa. Movements in the rand is significant to platinum's mining profitability, but they are very vulnerable to a fall in the US dollar. The central bank gold buying is making sure that the gold demand is artificially higher, but they're not buying silver and they're not buying platinum. So demand for these metals are at normal levels. Something that investors might be interested in, though, there has been reports that the Russian central bank will be considering platinum and also silver as part of their foreign reserves. So technically, one of the central banks might be buying platinum, but overall, it's only gold that's seeing this surge in demand through sovereign buy-in. I've read many research papers, and a lot of analysts are scratching their head as to why platinum prices are not higher based on market fundamentals, but I think it's got a lot to do with the psychology of the market. When you look at the gold market over the past 12 months, since February 2024, it's been in quite an aggressive uptrend. And what this has done is it's sucked in a lot of speculative capital chasing quick gains. Platinum hasn't had any of this. So all of the people looking to invest in a stock or an asset that will go up quickly would gravitate towards gold, but they wouldn't be looking at platinum. Another big factor on why the platinum market is such a depressed market at the moment is because of platinum's inability to demonstrate that it has safe haven qualities like gold. If we go back to looking at how platinum's spot price performed during the 2008 financial crisis, you can see that market was absolutely hammered. The platinum price crashed. We saw something very similar with the 2020 lockdowns as well. The price of platinum absolutely collapsed. And when you think about what precious metals gives an investor, it's diversification and the potential for the asset to appreciate or at least hold its value when all other assets are being sold off. You can't extend this to platinum. We've seen that in 2008 and in 2020. When there's a big financial crash, platinum prices are hammered. Switching gold for platinum and waiting for the ratio to go back to 2 to 1 is still historically quite expensive. Gold would still be historically overvalued against platinum, but it will be a lot less extreme than what we're seeing today. Given that gold would still be quite expensive compared to platinum when you look back historically, I think there's a very good chance that this will happen. The gold and platinum ratio story is quite an interesting one because I think that we're seeing these extreme levels because a lot of the real world developments that could have pushed the gold price up have already happened. We've had wars, concern about inflation, big central bank buying, and also strong momentum that's sucking in speculative capital. If I'm right about the platinum to gold ratio normalizing at least to 2 to 1, then this could be one of the biggest contrarian plays available in the market at the moment. Whilst gold investors are cheering and celebrating the gold price going up, you've got platinum miners that are producing at break even. Something's got to give.